A few videos ago, when I explained why I was buying the Micron dip, I told you to circle one date on your calendar, July 7th. Samsung's earnings as the cross-check for everything Micron told us. Well, today is that day. Samsung just posted one of the most stunning quarters in its entire history. And the stock is falling. If that sounds contradictory, stay with me. Because the record itself is not the story. The real story is what these numbers tell us about all three memory giants. Samsung, SK Hynix, and Micron. And with SK Hynix set to start trading on the Nasdaq in just 3 days. This could not be more timely. Quick note first, this is my personal opinion and analysis, not financial advice, and I am not a licensed advisor. Please do your own research. On July 7th, Samsung disclosed preliminary Q2 results. On 71 trillion won in revenue and 89.4 trillion won in operating profit, both the highest quarterly figures in company history. That operating profit is up about 56% from the prior quarter, and an almost unbelievable 1,810%, higher than the same quarter a year ago, when the chip division was still crawling through a down cycle. For the first half of 2026, operating profit reached 146.63 trillion won, more than 12 times what Samsung earned in the first half of last year. This is one of the great earnings turnarounds in the company's history, powered almost entirely by the memory recovery and surging AI demand. Three forces tangled together, and none of them are what you would think. First, profit-taking. Buy the rumor, sell the news. The stock had already run up hard into the report. So a record that basically matched expectations, gave traders an easy moment to lock in gains. Second, an accounting wrinkle. Ahead of the report, brokerages actually trimmed their profit forecasts. Not because the chip business weakened, but because Samsung was booking larger employee bonus provisions this quarter. Analysts were explicit that this was a timing and accounting issue, and most kept their bullish top pick ratings. Third, lingering nerves from the Meta story. Reports that Meta may pivot into leasing out its own cloud capacity stoked fears of an AI spending slowdown earlier in the week, pushing Samsung below the psychological 300,000 won line. Some of that anxiety is still hanging around today. Here is the distinction Korean analysts keep drawing, and I agree with it. The Meta headline and the bonus accounting are noise. What would actually damage the memory? Thesis is a pullback in hyperscaler spending, shrinking long-term HBM contracts, cooling server DRAM prices, or falling next-generation GPU orders. None of those have shown up. In fact, generic DRAM prices rose 58% quarter-over-quarter, and NAND jumped 75%, both beating expectations. The memory bottleneck is translating directly into surging profit. Now, the part I actually made this video for. Samsung, SK Hynix, and Micron increasingly move as one connected trade, and today's numbers are a powerful read-across to the other two. Think about it like a project manager, reading one vendor's report to forecast the whole program. Samsung is the biggest data point we have, and it just confirmed that DRAM and NAND pricing. Power is not a company-specific fluke. It is industry-wide. If pricing is this strong for Samsung, the same tightness is flowing into SK Hynix and Micron at the same time. The margins tell the story. Micron's operating margin has already climbed above 80%, and Japan's Kioxia is guiding to a similarly extraordinary 74% for the same quarter. When every major producer is printing margins like that at once, it is not a one-company narrative. It is a global bottleneck lifting all of them together. So for Micron specifically, heading into its next earnings, Samsung's blowout is reassuring. The exact supply and demand tightness that drove Samsung's 1,810% profit surge is the same tightness Micron has been selling into. And for SK Hynix, which starts trading on the Nasdaq this Friday, Samsung just set the tone 3 days before its debut. The whole complex now shares one story. But I want to be balanced, because analysts flagged something real. As competition for HBM and enterprise SSD share heats up in the second half, and as concerns grow about Chinese memory makers gaining ground, volatility across all three stocks could rise, even if the underlying earnings stay strong. That is the key lesson from today. Strong fundamentals and a choppy stock price can absolutely coexist. Samsung is living proof of it right now. A record quarter and a red screen on the same day. So do not let today's drop confuse you about the bigger picture. The stock fell on profit, taking a one-off accounting item and unrelated jitters. The earnings themselves confirm the memory supercycle is real and accelerating, and that it is lifting all three producers together. For Micron watchers, that is the reassuring signal. For SK Hynix, it is a strong tailwind into Friday's Nasdaq debut. And one more time, sincerely, this is just my personal read. Preliminary figures can be revised, and prices can move, for reasons that have nothing to do with fundamentals. Do your own research and talk to a licensed professional. If you want my breakdown when SK Hynix starts trading Friday, and when Micron reports next, subscribe. And tell me in the comments record quarter, red stock, noise or warning. See you in the next one.